Hello and welcome to this new video. Today we're going to discuss the concept of selecting the right higher time frame point of interest. We start with our higher time frame point of interest. Depends on your trading style, but let's say you trade intraday. We start on the daily. Why in the daily? Because of course first we have to know what's the order flow. Well, what we see right here, price expanded higher, retraced and found support inside this daily BISI. What I can say then, as long as price finds support in this daily BISI, I'm looking for a bullish point of interest. So that means my POI has to be below current market price to reverse from. So what I then can see is that this BISI has been used multiple times. So it means this is a PD array I can trust. What it would also mean is right now, as long as price finds support in here, I'm looking for buys. The moment price would displace through it, use it as resistance and expand from it, that means that I would now use it as a bearish POI because it's above my current market price. So what I see right here is December high, and when December high is a draw, I want to see that this box keeps price inside. It can displace a little bit outside. This is called price distortion. And as long as we do not reach it, I'm anticipating, and we stay above the box, I'm anticipating December high to get reached. If we then drop to the hourly time frame, we can do the same. That means that when I open up a new week and I look to the previous price action, what we will see is that from this daily imbalance right here, so that daily BISI, multiple market maker buy models have been unfolding. So what I then can see is on the left side, I see, okay, we form a swing low here, here, and here. And to me, this one is suspicious. Why? Because it stops right in advance of our point of interest. So I look at this as engineered liquidity. What you can see then is that you can blend time cycles with point of interest. Because when I'm looking for a swing setup or for the low of week to form, well, then I can say I have these equal lows right there, as you can see. We have this trendline liquidity, because retail would look at this as trendline liquidity. On Monday, price runs up, forms this BISI, and then what I see price using it right here. So my eye is directly drawn to it, and I'm looking at it and then say, okay, I see this is being used multiple times to set up certain expansions and retracements. As we can see, right here, on Monday, we run up, come back into it, set up a new market maker buy model from there, drop lower into it, set up a new one. Once we displace it, what do we want to see? This now becomes my bearish point of interest. And the moment I displace this hourly BISI with the CIBI, right here we have a swing low formed in between it, that's your market structure shift pattern, retrace into it. The blue box now becomes my bearish point of interest. And what do I know? Once we displace through it, I have this stack liquidity down here. And also this low gave it away. This is now my target to short into. And then I have to see, okay, what is going to occur inside my point of interest? What do I want to see in my point of interest? I want to see S&T being set up in there. So what can I see? I will take ES in there for the equation. Look, what do we see? Once we switch from bullish into bearish, you see this retracement and you see S&T being set up right in these highs. Same goes for the lows. And this is exactly what I want to see. Because once we purge that liquidity, time-based wise, I'm looking, okay, after the purge of time-based liquidity, price can reverse, or if rebalancing a price, an imbalance, so to say. What do? We take out the liquidity, form a session SMT down here, and then the market starts to displace higher again. Because we did not displace outside my daily invalidation level, because if you go back to the daily, what you can see, what I outlined, as long as price stays above or inside this box, I'm bullish. So that doesn't mean that once price trades into here, I'm looking for price to go through it. No, I want that reversal to set up inside my higher time frame POI, as I've seen what has been proven to work multiple times. Why can I frame that my reversal is going to form here? Well, because we haven't met my higher time frame drawn liquidity, and this is also engineered liquidity right in advance of it. So by seeing this, I now know, okay, we formed the low, price reversed, I'm looking for buys again. The first point where I'm interested in, okay, where can we reject again, is this BISI right here. We displace it, we chop a little bit around of it, reject weekly open, drop back below it. Now I'm saying, okay, I'm looking again for shorts into my daily point of interest. And then what we see, we hit it, and then we start to consolidate. If you select the right POI for, let's say, and price is stuck in range like this week, you can basically trade of it the whole week. The whole week you can utilize it to gauge order flow and to look for setups. But you have to be patient and let the market show its hand to you. Because the moment I'm seeing this and I see that retracement, I'm smiling. Why? Because I know potentially there's going to set up an SMR here to drop lower into my daily POI. And that's how you can play ping pong in between these BISIs or SIBIs. I hope you enjoyed the lecture. If you have any questions, leave them in the comments, and like and subscribe, and we see us in the next one. Bye bye.